documenting the history of Minnesota's insurance industry will enable future generations to build upon our successes. We've prepared a short video highlighting the history of our insurance industry, created by Jack Meusey, the founder and publisher of the esteemed Minnesota Insurance Magazine. When Secretary of the Minnesota Territory, Alexander Wilkin, in 1853, gathered 16 St. Paul business owners to determine the best way to protect the city's buildings from a growing fire threat, it is unlikely that group ever envisioned what their gathering would ultimately bring about. But the industry they started by creating the St. Paul Fire and Marine Company evolved over the ensuing decades to provide protective coverages that enabled Minnesotans to expand, flourish, and even achieve statehood within 5 years. Other insurers, such as Minnesota Mutual Life, were also soon established, and a wide variety of companies and coverages followed. In 1913, for instance, workers' compensation was introduced in the state, making Minnesota among the first to have that important coverage safeguarding employees. Another major change occurred in 1945 when Congress passed the McCarran-Ferguson Act that declared state regulation of insurance was in the best interest of the country. And, as it turned out, it was. But it was also state regulators who became entangled in Minnesota's biggest insurance scandal ever. In 1965, when the insurance commissioner allegedly colluded with owners of the insolvent St. Paul-based insurer American Allied to steal $3.7 million from policyholders. The case, which was in the headlines for 2 years, resulted in major state legislation that included a large increase in the number of insurance examiners and other significant reforms to the long-term benefit of the industry. About a decade later, insurance made much more positive headlines with the establishment of an innovative health maintenance organization that had its aim providing incentives to avoid unnecessary hospital care. A year later, legislators passed a no-fault auto insurance law aimed at ensuring the prompt payment of injuries due to traffic accidents. As the size of the insurance industry expanded in the state during the 1970s and the 1980s, so did its landmarks, milestones, and impact. In 1996, the Insurance Federation of Minnesota effectively promoted a public relations campaign that emphasized that the average salary of the 64,000 people employed in insurance was 30% higher than the state's average. In 1982, the benefit of adequate insurance was again demonstrated when the Northwestern National Bank building in downtown Minneapolis was gutted by fire, causing massive damages that were covered, in part, by the St. Paul Fire and Marine. That fire also caused many insurers to realize the need for sprinkler systems in such buildings, and similarly caused building owners to appreciate the value of such protections. Also at that time, the state's Commerce Commission combined separate commissioners for insurance, banking, real estate, securities, and consumer services with a sole commissioner. A year later, in 1984, lawmakers created the State Fund Mutual Company to stabilize the Minnesota workers' compensation insurance marketplace that was beset with rising costs and unpredictability. As the state's insurance industry moved into its second century, the realization arose for the need to attract younger professionals to the industry. In 1987, Minnesota reinsurance broker E.W. Blanche donated $1 million to establish the chair of insurance at the University of St. Thomas. A few years later, the University of Minnesota renamed its industry chair of insurance in honor of retiring Professor C. Arthur Williams, who himself had made many strides toward encouraging students to join the industry. In further recognition of the nexus between insurance and education, the University of Minnesota in 2012 saw Health Insurance Agency Executive Vice President Thomas Devine become the first person from the state's insurance community to serve on the U's prestigious Board of Regents. The importance of insurance resounded again throughout the state in 2013 with passage of the National Affordable Care Act, which led to lawmakers passing legislation that established state-run MNsure as a source of health insurance. In 2020, it was the state's property casualty and liability sectors that stepped back into the spotlight. The devastation brought on by the riots that followed the murder of George Floyd resulted in $500 million in damages, a large portion of which was paid by insurers. A few months later, COVID began fully emerging, resulting in shops, stores, and restaurants to close down, moving the issue of business interruption coverages to the forefront. 2 years later, it was health insurance that got attention. But this time, it was because something good had happened. The number of Minnesotans without such crucial coverage had dropped to an all-time low. As agents, brokers, owners, managers, underwriters, actuaries, and others know as well as anyone, the future is unpredictable. But they also know, just as their predecessors did over a century and a half ago, that the insurance coverage they provide will continue to play a pivotal role in the lives of their fellow Minnesotans.